All right, get ready. Today we're taking a deep dive into high finance with Bank of Baroda's second quarter performance for fiscal year 2025. You guys sent over a ton of reports, standalone financials, the consolidated results, press releases, and even some interesting stuff about their sustainability and digital plans. So let's get into it. Now, I've looked over these, and at first glance, things look pretty good, don't they? A 23.2% jump in net profit year over year. That's huge. But I also know things aren't always what they appear to be, especially when it comes to finance.
Yeah, you're absolutely right. One number never tells the whole story. What's really interesting here is that while profit is up, the details hint at both strategic wins and potential challenges for Bank of Baroda. To really understand what's going on, we need to look beyond just the profit and dig into things like how well their core business is doing, the quality of their assets, and how their different segments are performing.
Okay, so before we get lost in all the details of these reports, can you paint us a picture? What's the big picture overview of Bank of Baroda's performance this quarter?
Okay, let's start with that headline number. Their net profit. It did indeed surge by 23.2% year over year, reaching a whopping 5,238 crore rupees. But their net interest margin, which basically tells us how profitable their lending activities are, only inched up slightly, just 3 basis points to 3.0%. Think of it like this. You're lending money to a friend. The interest they pay you is like the yield on advances. But you also have to pay interest on the money you borrowed to lend to your friend, and that's the cost of deposits. The difference between the two is like Bank of Baroda's profit margin on lending. In this case, while they're lending more, the margin they're making on each loan isn't growing as much as you might expect with that profit jump. Now, their total business did grow by a solid 10.2% year over year, reaching over 25,065 crore rupees, and their capital adequacy ratio, which is a key measure of financial strength, stood at a very healthy 16.26%.
Okay, so profit is way up, but that profit margin isn't moving much, even with the total business growing. That does seem a bit strange. What's the story there?
Well, it suggests that while Bank of Baroda is expanding its operations and bringing in more revenue, its core lending business might not be as profitable as it could be. This could be due to several factors, such as increased competition forcing them to lower interest rates on loans, or a strategic shift towards assets that generate lower returns but might be less risky.
Interesting. So it's not just about growing the business, it's about growing it in a way that maximizes profit. So let's unpack those key highlights further, starting with the nitty-gritty of their financial performance. How did Bank of Baroda actually make all that money this quarter?
We'll need to dive into their income statement for that. Their net interest income, which is the money they earn from lending minus the interest they paid on deposits, increased by a respectable 7.3% year over year, primarily driven by a 10.7% increase in interest earned on advances.
So they're lending more, and that's boosting their interest income. Makes sense. But you mentioned their net interest margin wasn't growing as fast. What else is happening there?
Right, we need to look at the full picture. While their loan book is growing, the average interest rate they're earning on those loans, or the yield on advances, has stayed relatively stable at around 8.5%. At the same time, the cost of deposits, the interest they pay to customers for their savings and term deposits, is also on the rise, averaging around 4.75%.
So it's like squeezing a balloon. They're getting more revenue on one end, but their costs are pushing up on the other, keeping that margin tight. All right, we've talked about the interest income, but we can't forget about that eye-popping 24.2% jump in non-interest income. That's a huge increase. What fueled that growth?
Now here's where things get interesting. Bank of Baroda saw strong gains in treasury income, which is their earnings from investments and trading activities, and also in fee-based income from services like account maintenance and transaction fees. But the real star of the show was the surge in other non-interest income, which skyrocketed by almost 80%, a whopping 79.9% year over year, to be exact.
Whoa, almost 80%. What's driving that massive spike? Did they stumble upon a hidden treasure chest somewhere?
Not quite a treasure chest, but it's still a significant development. Looking closer, a large portion of this other income came from recovering money from accounts they had previously written off, essentially loans they thought they'd never see a rupee from again. This recovery jumped from 12,231 crore rupees in the same quarter last year to a hefty 2,525 crore rupees this quarter.
Wow, so they're getting back money they'd essentially kissed goodbye. That's a pleasant surprise, but is that kind of recovery sustainable, or is it just a one-off lucky break?
That's the million-dollar question. It could be a sign that their risk management has improved, or it could just be a fortunate coincidence. We'll need to keep a close eye on this trend in the coming quarters to see if it continues.
Okay, so we'll mark that as something to watch. So they're bringing in more money from both interest and non-interest sources, but running a bank isn't free, right? What can you tell us about their expenses this quarter?
Their operating expenses increased by a moderate 4.9% year over year. A big chunk of that increase came from rising employee costs, which went up by 9%. This could be tied to their efforts to expand their operations, both domestically and internationally, and investments they're making in things like new technologies and staff training.
So they're spending more to grow their business, which isn't necessarily a bad thing, especially if those investments pay off down the line. But with all the talk about economic uncertainty these days, is this level of expense growth sustainable in the long run?
That's a crucial question. We'll need to see how efficiently Bank of Baroda is managing its costs compared to its competitors.
Hmm.
One way to do that is by looking at their cost to income ratio, which basically measures how much they spend for every rupee they earn. If that ratio starts creeping up too high, it could be a warning sign that their spending isn't translating into sufficient income growth.
All right, so far we've got a mixed bag. Profit is way up, but the profit margin on their core business isn't growing as much as we might expect, and expenses are on the rise. Before we move on, can you tie this all together for us? What does Bank of Baroda's income statement tell us about their overall strategy and how well they're executing it?
What's fascinating here is that Bank of Baroda is clearly trying to diversify its revenue streams.
Mm.
They're not putting all their eggs in one basket by solely relying on traditional lending. Instead, they're actively looking for new ways to make money, whether it's through fees, investments, or their various subsidiaries. This approach makes a lot of sense given the competitive landscape of the banking industry today. They need to adapt to changing customer needs and find creative ways to stay ahead.
Makes total sense. Speaking of adapting and changing, let's move on to how Bank of Baroda is doing in terms of attracting deposits and making loans. After all, that's the bread and butter of any bank, right? Let's start with deposits. How did they fare this quarter?
Bank of Baroda saw healthy deposit growth this quarter, with total deposits increasing by a solid 9.1% year over year. This growth was fueled by both domestic and international deposits.
Okay, so deposits are up. That's a good sign. But before we get into the details, I have to ask what exactly are domestic and international deposits and what's the difference?
Great question. Domestic deposits are simply those collected from customers within India. International deposits come from customers outside of India. For a bank like Bank of Baroda, which has a significant international presence, both are important.
That makes sense. Now, you mentioned both types of deposits were up. Any particular standout there?
International deposits showed particularly strong growth,
Yeah.
jumping by an impressive 21.2% year over year.
Wow, 21%. That's huge. What's driving that surge in international deposits? Are they opening new branches overseas or attracting more foreign customers or is something else going on?
It's likely a combination of factors. Bank
Yeah.
of Baroda has been expanding its international footprint in recent years,
Yeah.
and they've also been focusing on attracting high net worth individuals and businesses from overseas.
Yeah.
This growth in international deposits is a good sign for them as it helps them diversify their funding sources and reduces their reliance on deposits from within India.
Okay, so deposits are up,
Mhm.
which is great, but are they actually lending out all that money they're gathering, or is it just sitting there?
They're definitely putting that money to work. Bank of Baroda's global advances or loans grew by a robust 11.6% year over year, reaching over 11,430 crore rupees. This growth was seen across all their segments, with retail advances leading the pack with a 19.9% jump, followed by MSME advances at 11.7% and corporate advances at a more moderate 10.6%.
So they're lending to everyone from individuals to small businesses to big corporations. That sounds pretty well balanced. But let's break those categories down further. What's driving that incredible growth in retail advances? Are people suddenly buying more homes and cars?
You hit the nail on the head. Home loans and auto loans were major contributors to that retail advance growth, which would suggest there's still strong consumer confidence in the economy.
Yeah.
But this is something we need to watch carefully, especially considering potential economic uncertainties.
Good point. A sudden shift in the economy could quickly change consumer behavior, and how about MSME advances, those loans to small and medium-sized enterprises? Those are crucial for any bank, especially in a country like India. Is Bank of Baroda doing enough to support these businesses?
Their performance in this area is encouraging. That 11.7% growth in MSME advances indicates they're committed to supporting this vital segment of the economy. It also aligns with the government's initiatives to encourage lending to MSMEs, which could have a significant positive impact on economic growth in the long run.
All right, so they're doing well with retail and MSME lending, but what about corporate advances? That 10.6% growth seems a bit lackluster compared to the other segments. Is there something going on there?
That's a valid observation. The growth in corporate advances was indeed the lowest among the three segments. This could be due to a number of factors, including decreased investment appetite from large companies, stricter lending standards from banks, or simply a shift in demand from companies towards other sources of financing.
So it's not necessarily a bad sign, but it's something to keep an eye on just in case it signals a broader trend. Now, let's talk about the elephant in the room when it comes to banks. Asset quality. How are Bank of Baroda's non-performing assets, NPAs, those loans that aren't being repaid, looking this quarter?
Let's start with the good news. Bank of Baroda's asset quality has actually improved quite a bit year over year. Their gross NPA ratio, which is the percentage of their total loans that are considered non-performing, dropped by a significant 82 basis points to 2.50%. Their net NPA ratio, which factors in provisions they've set aside to cover potential losses, also fell by 16 basis points to 0.60%.
Okay, so their bad loans are shrinking. That's definitely a step in the right direction. What's driving this improvement? Are borrowers suddenly becoming more responsible and paying back their loans on time, or is there something else going on behind the scenes?
There are a few things contributing to this positive trend. First, they've seen a reduction in NPAs through a combination of recoveries, upgrades, and write-offs.
Hold on. Can you break that down for us? What exactly does it mean to recover, upgrade, or write off a loan? Some of our listeners might not be familiar with those terms.
Of course, recovery means they've actually collected some or all of the money owed on a loan that was previously considered non-performing, and an upgrade means a loan that was previously classified as non-performing has started performing again, possibly because the borrower's financial situation has improved. And a write-off is when the bank essentially gives up hope of ever collecting the money and removes the loan from its books entirely. It's like when you lend money to a friend and eventually accept that you're probably never going to see that money again.
Got it. So which of those actions had the biggest impact on Bank of Baroda's NPA reduction this quarter?
While recoveries and upgrades definitely played a role, write-offs seem to have had a significant impact. Write-offs actually increased from 3,402 crore rupees in the same quarter last year to 3,592 crore rupees this quarter.
So they're cleaning up their balance sheet by getting rid of some of those really bad loans, even though it might sting a bit in the short term, but doesn't that hurt their profitability?
It does have an impact, but it also allows them to focus on more promising lending opportunities. It's a balancing act.
All right, so they're getting rid of some of those bad loans, which seems like a smart move for the long term. What else is contributing to their improved asset quality?
Another positive indicator is the decline in fresh slippages. Slippages are basically loans that were performing well but have not turned non-performing. Bank of Baroda's fresh slippages were lower this quarter compared to the same period last year, which suggests that their risk management practices are starting to pay off.
That's encouraging. So they're not just cleaning up old messes; they're also getting better at identifying and managing risky loans before they turn into bigger problems. But are there any specific sectors or industries that are still giving them headaches? Any potential red flags we should be aware of?
That's an excellent question, and one that any investor should be asking. While the overall trend in asset quality is positive, There are always risks lurking beneath the surface. To get a clearer picture, we'll need to examine the data at a more granular level, looking at specific sectors and industries to see if there are any areas of concern.
Okay, so we need to stay vigilant. But overall, it sounds like Bank of Baroda is making good progress in cleaning up its loan portfolio. That's great news for the bank's long-term health. But before we move on to their sustainability and digital initiatives, I want to get your take. We've covered a lot of ground here: profit, margin, income, expenses, deposits, loans, asset quality runs. What stands out to you as the most important takeaway from Bank of Baroda's performance so far this quarter?
For me, it's the combination of strong profit growth, even though it's partly driven by those one-time recoveries, coupled with the significant improvement in asset quality. This suggests they're making progress on multiple fronts. However, there are still some open questions about whether they can sustain these positive trends over time. We'll definitely to keep a close eye on things in the coming quarters.
I totally agree. Those are definitely key points to monitor. For me, what's particularly interesting is Bank of Baroda's come-year focus on diversifying its revenue streams. They're not content to just sit back and rely on traditional lending activities. They're actively exploring new ways to generate income, which could put them in a very strong position for the future.
Absolutely. That proactive approach to adapting to a changing market is something we should definitely be watching closely.
All right, we've gotten a good grasp on their financial performance and their lending activities. Now let's move on to something that's becoming more and more important to customers and investors alike: sustainability.
Yeah.
Bank of Baroda has been making quite a bit of noise about their commitment to environmental and social responsibility, but are they walking the walk, or is it all just talk?
That's a great question, and one we'll delve into in more detail shortly. From what we've gathered so far, Bank of Baroda has implemented several initiatives aimed at promoting sustainability, both within their own operations and through their lending practices. They've established a green finance framework. They're financing renewable energy projects, and they're even encouraging their employees to participate in social responsibility programs.
It sounds like they're ticking all the boxes, but how do these initiatives actually translate into real world impact? Are they just going through the motions, or are they truly making a difference?
To really answer that question, we need to go beyond the surface and look at the data. They've reported some impressive achievements, like high rates of digital transactions, increasing access to digital passbooks, and strong adoption of their Bob World mobile app. But we need to dig deeper to see if these initiatives are moving the needle on sustainability and digital adoption compared to what their competitors are doing.
Okay, so it's not enough to just talk the talk. They need to show concrete results. We'll definitely explore those details further and see if Bank of Baroda is truly living up to their sustainability promises. And of course, we'll connect it back to you, our listener, whether you're a potential customer or an investor. We'll discuss how these initiatives might affect your decisions.
Absolutely. We'll analyze the impact of these initiatives on Bank of Baroda's overall performance and assess how they're positioning themselves for a future where sustainability and digital capabilities are increasingly important.
This is shaping up to be a fascinating deep dive. We've already uncovered some interesting insights, and we're just getting started. Stay tuned for part 2 of our exploration into Bank of Baroda, where we'll unpack their sustainability and digital initiatives in more detail and see how their subsidiaries are performing. All right, let's pick up where we left off. Last time we got a good grasp on Bank of Baroda's overall financial performance. Now it's time to dig deeper into their sustainability and digital initiatives, areas where a lot of banks are trying to make their mark. I'm really curious to see what Bank of Baroda is doing beyond the marketing hype. Let's start with their green banking push. They've been talking a big game about this. What exactly does that look like in practice?
Well, Bank of Baroda's sustainability efforts are multifaceted. They're financing a diverse range of renewable energy projects, offering green deposits and a green finance framework. And they've even partnered with an external agency to get an ESG risk rating. They're also promoting employee engagement in various social responsibility programs.
Okay, so they seem to be covering all the bases, but let's unpack that a bit. What kind of renewable energy projects are they putting their money behind?
They've got a pretty diverse portfolio, including solar power plants, wind farms, and even biogas plants. They're not just going it alone either. They're partnering with organizations like KfW, a German development bank, and IREDA, the Indian Renewable Energy Development Agency, to support the growth of the renewable energy sector in India.
So they're not just writing checks; they're actively collaborating to make a bigger impact. That's good to hear. You also mentioned green deposits. Can you explain what those are and how they work? I bet a lot of our listeners are curious about that.
Green deposits are a way for customers like you to align your savings with your values. Essentially, you deposit your money into these accounts, and Bank of Baroda uses those funds specifically to finance environmentally friendly projects. Think of it like a regular savings account, but with the added bonus of knowing your money is supporting projects that benefit the planet, as defined by their green finance framework.
That's a pretty cool concept. It's like putting your money where your mouth is when it comes to sustainability.
Yeah.
Now, what about this ESG risk rating system? How does that work, and what does it tell us about Bank of Baroda's sustainability performance?
ESG stands for environmental, social, and governance factors. And it's become a key metric for investors who want to support companies that are operating responsibly and sustainably. Bank of Baroda has partnered with esgrisk.ai, an independent agency, to assess their ESG performance and identify any potential risks or areas where they can improve. It's like getting a report card on their sustainability efforts.
So how did they score? Are they top of the class?
Their most recent rating was adequate, which means they're managing ESG risks at a satisfactory level.
Adequate. It's not a glowing endorsement, but it's not a failing grade either. I guess it's a decent starting point. It sounds like they have room for improvement. What about those employee engagement programs you mentioned? What are Bank of Baroda employees doing to contribute to sustainability?
According to their reports, they're involved in a wide range of activities, from tree planting drives and cleanliness campaigns to blood donation camps and supporting old age homes. They're even making an effort to run some of their branches on solar energy. Wow, that's pretty impressive. It sounds like they're really trying to create a culture of sustainability throughout the organization from the top down. But how do Bank of Baroda's sustainability efforts stack up against other banks in the industry? Are they leading the pack, or are they playing catch up? That's a tough question to answer definitively. There's no single universal standard for measuring sustainability in the banking sector. However, Bank of Baroda's initiatives seem to be in line with what many other banks are doing. There's a growing recognition across the industry that sustainable finance is not just a trend, but a necessity. Many banks are taking steps to incorporate ESG factors into their strategies and operations.
So it seems like they're keeping pace, but maybe not setting the bar higher. But here's the real question for our listeners. Do these sustainability initiatives actually matter to you? If you're a Bank of Baroda customer or thinking about the coming one, do these factors influence your decision?
That's a great question for our listeners to consider. More and more people are aligning their financial decisions with their values. So if you care about the environment and social impact, Bank of Baroda's efforts in these areas might be a factor in your decision making.
It's definitely food for thought. Now let's switch gears and talk about Bank of Baroda's digital transformation. It seems like every bank is trying to become the next big fintech disruptor these days. How is Bank of Baroda faring in this digital arena?
They've been making some impressive strides in digital banking. They've seen a significant increase in the number of transactions being done digitally, with over 95% now happening online or through their mobile app. They've also seen strong adoption of their mobile app, Bob World, which offers a wide range of banking services right at your fingertips.
Okay, so they're moving in the right direction. But what exactly can you do with this Bob World app? What makes it stand out from the crowd of other banking apps out there?
Bob World offers a pretty comprehensive suite of services, including the basics like account management, fund transfers, and bill payments, but also things like investment options. They're also leveraging technology like AI and chatbots to improve the customer experience and personalize services.
So they're trying to make banking as convenient and user-friendly as possible. But let's be honest, almost every bank has a mobile app these days. What makes Baroda different? Are there any unique or innovative features that really set it apart?
One thing that stands out is their focus on financial inclusion. They've made a conscious effort to make their digital services accessible to a wider range of customers.
Yeah.
Including those in rural areas who might have limited access to traditional banking services, or those who might not be as comfortable with technology. They've also introduced features like voice banking and support for vernacular languages to cater to a diverse customer base.
That's a really smart move, especially in a country like India where mobile penetration is high, but digital literacy and access can vary widely. It sounds like they're trying to bridge that gap. But how do they measure up against their competitors in terms of digital innovation? Are they leading the charge, or are they just keeping up with the Joneses?
They've definitely made significant progress in recent years and have achieved some impressive milestones. They rank third in UPI remittances, which is a popular mobile payment system in India, and IMPS beneficiary additions, which is another measure of digital transaction growth. They're also second in debit card issuance. They boast a high UPI remittance success rate, meaning their systems are reliable, and a large portion of their new customers are acquired digitally, showing that their digital strategy is working.
Okay, so they're not slouches in the digital department, but are they pushing the boundaries of what's possible in banking, or are they simply adopting what everyone else is doing?
It's probably a bit both. They're embracing many of the latest technologies and trends, but they're also focusing on making those technologies work for a broad spectrum of customers. This approach is essential for a bank like Bank of Baroda, which has such a large and diverse customer base across India and beyond.
Makes sense. They're not necessarily the flashy new fintech startup on the
Yep.
block, but they're steadily digitizing their operations and making banking more accessible for everyone. But as always, we want to connect back to you, our listener. Do these digital initiatives matter to you?
That's the key question. In today's world, people expect their banking experience to be fast, convenient, and available whenever and wherever they are. If that's something you value, then Bank of Baroda's digital initiatives are worth paying attention to.
Excellent point. We've covered a lot of ground on Bank of Baroda's sustainability and digital initiatives.
Mm.
Before we move on to their subsidiaries, let's take a step back and consider the bigger picture. What does their commitment to these areas tell us about their vision for the future?
What's fascinating here is that Bank of Baroda seems to understand that the future of banking goes beyond just balance sheets and profit margins. They're investing in sustainability and digital transformation, not just because it's trendy, but because it's crucial for their long-term growth and relevance.
I couldn't agree more. They're positioning themselves as a bank that's both financially sound and in tune with the evolving values and expectations of their customers. Now let's turn our attention to Bank of Baroda's subsidiaries and joint ventures. They've got quite a few irons in the fire, so to speak. Can you give us a brief overview of their key subsidiaries and how they're contributing to Bank of Baroda's overall performance?
They have a diverse portfolio of subsidiaries, each playing a different role in their overall strategy. There's Bobi Card, their credit card business; India First Life Insurance, their insurance arm; Baroda BNP Paribas Asset Management, their asset management company; and Baroda Global Shared Services, which provides back office support. They also have a joint venture called India Infradebt Limited, which focuses on financing infrastructure projects.
So they're really covering a lot of ground. But let's focus on the key takeaways. Which of these subsidiaries are performing well, and are there any that are dragging down the group's overall performance?
Based on the information you provided, Baba Cart seems to be doing quite well, with the number of cards in circulation increasing by 29.68% year over year, and spending on those cards jumping by nearly 40%. That's a clear sign that their credit card business is thriving.
India First Life Insurance is facing some headwinds
Right.
with new business premiums declining. However, their overall gross written premium, which represents their total insurance business, is holding steady. Baroda BNP Paribas Asset Management is another bright spot,
Mhm.
demonstrating strong growth with assets under management increasing by an impressive 44%.
So a mixed bag, but overall it sounds like their subsidiaries are making a positive contribution to Bank of Baroda's bottom line.
That's right. Their subsidiaries provide them with diversification and additional revenue streams, which can be a buffer if their core banking business faces challenges.
All right, we've covered a lot of ground today. We've examined Bank of Baroda's financials, their lending activities, their approach to sustainability and digital transformation. And we've even peeked into their subsidiaries. It's been a real deep dive. Before we wrap things up, let's zoom out for a moment and consider the bigger picture. What does all of this tell us about Bank of Baroda's future prospects?
That's the million-dollar question, isn't it? Bank of Baroda seems to be on the right track, making progress in multiple areas, but they're also operating in a challenging environment. The banking sector is becoming increasingly competitive with new players emerging and existing players stepping up their game. Bank of Baroda will need to keep innovating and adapting to stay ahead of the curve.
You're absolutely right. They can't afford to rest on their laurels. What are some of the specific challenges and opportunities they need to navigate in the coming quarters? What should our listeners be paying attention to?
One of the biggest hurdles they face is maintaining profitability in the face of rising costs and fierce competition. They'll need to find ways to keep expenses under control without sacrificing growth. It's a delicate balancing act. Another challenge is managing asset quality, especially given the uncertainty in the economic environment. They've made strides in reducing those bad loans, but they need to make sure those improvements are sustainable. Any economic downturn could put pressure on their loan portfolio.
So they need to stay
Yeah.
disciplined and proactive. But what about opportunities? What are some areas where Bank of Baroda can really shine?
One of their biggest opportunities lies in leveraging their digital capabilities to expand their reach and offer innovative products and services that cater to a wider customer base. They've already made significant progress in this area, but they can continue to push the boundaries and differentiate themselves from the competition. Think outside the traditional banking box.
I think outside the box. It's not enough to just follow the trends. They need to be trendsetters. What about their international expansion? Is that still a key part of their growth strategy?
It definitely seems to be. They've been steadily expanding their presence in overseas markets, and that could be a significant source of growth. However, they also need to be mindful of the risks associated with operating in different regulatory environments and economic conditions. Expanding internationally can be rewarding, but it's not without its challenges.
That's a great point. The global expansion requires a thoughtful and strategic approach. Okay, so we've got a good understanding of the challenges and opportunities facing Bank of Baroda, but how does all of this impact you, our listener, whether you're a potential customer, an investor, or just someone who's interested in the banking sector? Why should you care about any of this?
That's a great question to ponder as we wrap up this part of our deep dive. We've uncovered some interesting insights into Bank of Baroda's performance, their strategies, and their vision for the future. But the real value of this deep dive lies in what you do with this information. Use it to inform your own financial decisions, to spark further research, and to have meaningful conversations about the evolving landscape of banking.
We'll be back shortly to continue our conversation and explore some final thoughts on Bank of Baroda. Stay tuned.
Welcome back to our deep dive into Bank of Baroda. We've gone through their financials, their sustainability efforts, their digital transformation, and even taken a look at their subsidiaries. Now it's time to connect all the dots and see what picture emerges.
Yeah, exactly. We've sifted through a mountain of information from these financial documents, and now it's all about bringing those insights together in a way that you, our listener, can use.
Okay, so let's do a quick recap. What were some of the most surprising or insightful things we learned about Bank of Baroda today? What really stood out to you? Well, for me, the most interesting takeaway is the contrast between their impressive
profit growth, and their relatively stable net interest margin. It really underscores their strategic shift towards diversifying their revenue streams, which is a smart move in today's competitive market. They're not just relying on traditional lending. They're exploring new avenues for growth.
Absolutely. It's like they're building a multi-lane highway to success, not just relying on one road. They're actively pursuing income from fees, treasury operations, and their subsidiaries, which gives them more stability.
Right, and we can't forget their commitment to sustainability and digital transformation. They're making significant strides in both areas, which could give them a real edge,
Yeah.
especially with customers who prioritize those values.
Yeah, I agree. It's not just about profits anymore. It's about aligning with the changing world. But as with any investment, there are always risks to consider. What are some things investors should keep an eye on? Are there any potential red flags or areas of concern that popped up during our deep dive?
One thing to watch is the sustainability of their profit growth. A big chunk of that increase this quarter came from recovering money they had previously written off. Remember those loans they thought they'd never see again? While it's fantastic they recovered those funds, it might not be something they can replicate consistently.
That's a really good point. They need to prove they can generate strong earnings from their core business operations quarter after quarter, not just rely on one-time windfalls. What else should investors be monitoring?
Their asset quality is another area to watch closely. While they've made good progress in reducing those non-performing assets, they need to maintain that momentum and keep those fresh slippages under control. The economic outlook can change quickly, and any downturn could put pressure on their loan portfolio.
So vigilance is key. It's not enough to just clean up the past. They need to be proactive about managing risk going forward. Any other words of caution for our listeners?
It's always a good idea to compare Bank of Baroda's performance with its peers. How do their growth rates, profitability, and asset quality measure up against other banks in the industry? This kind of benchmarking can provide valuable context and help investors assess Bank of Baroda's relative strengths and weaknesses.
That's great advice. Don't just look at them in isolation. See how they stack up against the competition. Now let's shift our focus to the future. We've talked about the challenges and opportunities in front of Bank of Baroda, but here's a final thought-provoking question for you, our listener. Given the economic uncertainties and the rapidly changing landscape of banking, what do you think are the biggest risks and opportunities Bank of Baroda faces in the next quarter, and how might those impact your financial decisions?
That's a fantastic question to leave our listeners with. There's a lot to consider. Interest rate fluctuations, inflation, technological disruption, regulatory changes. It's a complex world out there. Bank of Baroda's success will depend on how well they navigate these uncertainties and make smart strategic choices.
And for you, our listener, we encourage you to keep exploring and learning about Bank of Baroda and the banking sector in general. Stay informed, stay engaged, and never be afraid to ask those tough questions. That's what deep dives are all about.
Absolutely. Knowledge is power, especially when it comes to your finances.
Thanks for joining us on this deep dive into Bank of Baroda. We hope you found it informative and insightful. Until next time, keep learning and keep diving deep.